Welcome back to our weekly technical analysis video for the Nifty 50. Last week, we forecasted a potential move for the market. This is the chart from last week. Now, let's take a look at what actually happened in the market. Will the markets continue the current trend? Or change trend? Or perhaps go sideways? We will try to find out answer to these questions. Stay tuned for our in-depth technical analysis video.
So hello there, hope you liked the introduction by our new member. So she is not real, by the way, she is created with AI or artificial intelligence. So if you like introduction given by the girl, so do suggest us some name for that girl. We'll add that name in the next video. So add the comment and suggest us some modern names for that girl. So let's get started with our analysis of the Nifty 50. We will do the analysis with price action indicators, then we'll check Elliott Wave, and at the end we'll check the option chain. Yeah, previous week's analysis was pretty much in line and we hit exactly 16,850 and then trying to recover a little. So first of all, let's try to understand with price action what is happening. So with price action, you can see here in last week we discussed the support near 16,950 and 16,850, right? So this was the support that we discussed. These are the two support lines. Hope it's pretty visible. And we also discussed about 17,400 support or resistance importance that was broken without a doubt. And then we had a continuous selling for 4 days. So what is going to happen next? So you can see here, this is a 13 EMA line, right? This is blue line is 13 EMA. Nifty is trading well below 200 EMA, then 48 EMA and 100 EMA. So this is the closest 13 EMA or short-term moving average. Nifty is trying to go towards that. Okay. So in next session, if Nifty drops and then in following session it covers, then it can come to this particular resistance. So which is near 250 level. Okay. So let's move this line here. So here we are going to take support. I'll delete this line now. So this is how the Nifty should move. Even if it has to drop in next session, it will recover, test this 13 EMA and then continue the dip. So yeah, and again, we have been keeping our bearish view because you can see here RSI haven't went below 30. Hopefully it's not went here as well below 30. So we need to check properly that in a trading view here, it's not completely visible. Okay, so if I check here, it just have touched but haven't broken the below 30. So it still didn't go below 30. It's still not in oversold area. By the way, Aron indicator is still at extreme. So Aron indicator shows the trend. Here the trend is extreme bearish. When the red line crosses 70 and the green line crosses below 30, it is considered as extreme bearish. So this was the extreme bullish period, right? Green line above 70, red line below 30. So opposite of that is currently true. So you can see here it is trading in a bearish market since a lot of time. Okay, so this is very long period. Nifty was never in this bearish momentum since long. Okay, you can check the previous charts. Nifty didn't stayed for long during all the falls from this particular area. Okay, so right now it's entering again a complete extreme bearish zones. Even during COVID, it was rapid fall, by the way, during COVID, so it didn't stay that long. It again recovered and gave the positive crossover. But if you see a couple of years chart, here we don't see a complete bearish picture here. One more scary thing that I just saw today was 3 black crows on monthly chart. So let's move to the monthly chart. Okay, so you see that from December, Jan and Feb, we got 3 consecutive closing in a red, right? So this indicates the 4th month will also close in red. So this is the 3 black crows pattern. Here you can see 3 black crows form consecutively, the trend changed to the downside. Same thing here. So you can read about the 3 black crows. We'll make a separate video on that. So that's all on the indicator fronts. Hope you clearly understand what's happening with price action and indicators. So let's move for the Elliott wave now. So this was a chart from last week where we expected a drop towards 4.600 Fibonacci. So this is what we explained in our last video, right? So this is the screenshot from last video. So this video we published on 12th March, right? And there we mentioned Nifty will drop towards 4.61 Fibonacci, then will bounce back, and then will go on the downside. So this extreme downside was given because we want to break 16,700, right? So 16,700 is our ultimate target, and the max extreme level on the Fibonacci extension is 4.618 Fibonacci. We can even add 5.618, but yeah, that can also happen, but usually it stops near 4.618 Fibonacci. So that's why we had this discussion and it pulled back. Okay, right now it's gave two indecision candles. It didn't made a new low right now in last two sessions. So we could expect a small pullback. What is that pullback level? Let's check that with the charts. So this is the chart with Elliott Wave, which we plotted. So initially I had the doubt on this 1-2 pattern. Okay, so I was thinking 1, 2, 3, 4, and then 5 is going to finish with ending diagonal pattern. Okay, so the problem here is this particular wave 1 is very big than this one. Okay, so internal move is big, so I was having a doubt whether it's 1, 2 or 3, 4, right? If it's 3, 4 here, and currently we are in a fifth wave, right? But fifth wave also does not look to be a clear 5-wave structure. So this assumes, like, this gives me idea that 1, 2, 1, 2 I have to place here, 3, 4 here, then fifth finished here. This completed the third wave, and currently we are in a fourth wave. Okay, so fourth wave is usually a consolidation, so it is tricky and it goes slow up. Okay, continues the trend, and it usually reaches to 0.32 Fibonacci. Here it is 17,200. It reaches near to that, and then it continues the dip on the downside. So don't worry, this trend line is broken, but yeah, that's how the fake moves are. So unless this is not broken, we should not consider this as a trend line break. Okay, so it can be a fake breakout as well. So currently we are in a fourth wave heading max towards 17,200 to 255. 255 is our previous resistance, right? So this is 255 from where we started the break on the downside. So yeah, expecting a move like this in a next week. Okay, so initially it should consolidate a little. So consolidation can be in a two ways. So one way, it can directly opens flat and then goes up. Okay, faces resistance near this. So some candles will be formed on next session. Okay, and it can go like this, and then it could start the dip. So let's check the levels now. Okay, so the levels will be like this. Okay, so this is a second case. Okay, instead of opening gap up, let's take a look at global markets. So the global markets are in deep red. Okay, Dow is down 1.19% or 1.2%. It's down 384 points. Considering that, there is a possibility that Nifty will pull back a little first. Okay, so this can be considered as a complex correction from the lows 16,850, wave A, B, and C. So C here can be considered as a ending diagonal 1, 2, 3, 4, and 5. Okay, like that. So this can be a complex structure, or you could say this as a zigzag W wave. Then this is another zigzag. Okay, where A is 1, 2, 3, 3, 4, and 5. Okay, so this A finished here. This B is going to finish if it opens gap down, or let's say a small a flat opening and then gap downs below 17,062. We can expect it to reach on the downside. So I'm assuming this particular support 17,062. If it is broken, then there is a chance to fall further. It can make one more low below 16,958, and from here it can again trap sellers, go up one more round, and then crash. So this is because we have to correct the 4 days continuous selling, right? So in last couple of sessions we have a continuous selling, so we have to cool down that move first before we further fall. So this is the idea behind the fourth waves correction. So that's what we are assuming right now, that it could make a complex correction like this WXY. It could be double zigzag correction. You can call it double zigzag correction, or it can be like this Y leg can be a flat correction as well. So this also can happen. So be prepared. Based on opening, we can decide. So if first 15 minutes high and low gets, first 15-minute candle opens, let's say gap down, and its low gets broken, then there is a signal that it will reach below 16,958. So unless 850 is not broken, we should not assume right now to go bearish for downside target of 16,700 to 750 levels, right? So that was the swing. That is the previous swing. Okay, so this is the chart and this is our previous view. We are expecting this to be broken. Okay, so that's what we are expecting, and this move can happen. But yeah, we have to wait and before we assume any bullish cases. So at least 16,700 is expected, or even 400 is also possible on the downside. So for now, what we are assuming is the case that it can go downside based on global cues and then give a pullback and then give a dip on the downside. Also, it's not advisable to go short directly here. We need to see some bearish pattern, let's say bearish engulfing, evening star, or a shooting star pattern, something of that sort we need to see. Then only we can judge that it is going to drop on the downside. Otherwise, it's not. Daily closing is important. We need to watch daily closing around this. If there is a rejection, then definitely it will look for going on the downside. So let's go to check now option chain. On the option chain front, let's see here what's happening. So 17,000 has now become major support. You can see here 17,000 has 70 lakh put writers, put open interest, suggests a support, and here the major resistance is at 17,500. Okay, after this the next number is actually 17,000 as a resistance, but here it has already crossed above this and closed near 17,200. So we should assume 17,000 is the range for this expiry and 17,500 on the upside. So this is the upper range. Okay, the second number that we see as a support here is 17,100. Okay, so the second number, and here 17,200 as a resistance, because here we have second biggest number as 49 lakhs. Okay, so call open interest acts as a resistance and put open interest acts as a support. So 17,100 to 200 is another smaller range, and 17,000 to 17,500 is the major range for this expiry. So if Nifty has to go bullish, it has to cross this level. Okay, and if it has to go bearish, it has to break below 17,000. So this is how we can read the option chain, and this is how the option chain data suggests us. So hope you like the analysis. I'll add the summary here. So do read the summary properly, and let's see if the move happens in that direction or not. So a pullback and then the bearish move should continue. That's what our analysis says. Let's see how the market moves next week. Stay tuned. Do subscribe to the channel. We create 1-minute video daily as well on the Nifty. You can watch those videos as well. Thanks for watching. Bye-bye.